Hello, this is Matt on the Moon Family Sedan channel. Crypto markets have recovered today with explosive force, led unquestionably by Bitcoin. In fact, Bitcoin up over 20% compared to its recent low just a few days ago on March 10th of somewhere in the neighborhood of 19,500-ish, somewhere around there. And I will tell you, this has been, in terms of like pure chaos and uncertainty and turbulence, this has been one of the most notable time periods for such in the 5+ years that I've been in the world of crypto. And there have been some, obviously uh, close contenders in that category. You can think about the March 2020 collapse with the pandemic. You can talk about any number of instances, even last year, from Luna to Three Arrows Capital, Voyager, Celsius, FTX, all of that. I don't need to tell you folks, But this is certainly up there. This is way up there. It's in that category in terms of the uncertainty, the fear, and how markets are reacting. So I'm going to share with you some updates in that regard, but I'll tell you this. For crypto, it's looking very good, and seeing Bitcoin lead the way out of this thing, like historically, based on historic precedent, what you'd expect to see, these are all positive signs. And altcoins are up too, broadly speaking. I mean, it's a sea of green. You can look as I scroll down for those of you that care to look. I'm on Live Coin Watch here. It's just a sea of green, and to varying degrees. XRP's up, a little bit less than 1% earlier today. It was closer to up about 3% over the last 24 hours. Bitcoin up almost 11% over the last 24 hours. So it's all good stuff here. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice. And you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. So last night I made a little bonus video that I wasn't planning on doing because there was some breaking news. We found out what the Fed's approach would be to the banking crisis. So obviously there was Silvergate that collapsed. Then there was Silicon Valley Bank, and then we found out last night that also Signature Bank collapsed. And these are three banks that were very crypto-friendly. And I'll talk more specifically about some of this in separate videos, but what you need to know for the purposes right now, since we're talking about just general market performance, is that when it comes to Silicon Valley Bank, which up until late yesterday was the strongest concern, all of the depositors with that bank, they're backed. And so banks are not getting a bailout here. Signature Bank is and Silicon Valley Bank and Silvergate Bank. These banks are not being bailed out, but the depositors are going to be made whole. FDIC and the Federal Reserve are making sure of that. They publicly announced that last night to kind of prevent any sort of spread of a contagion, is the key word that people like to use lately, about the spreading of financial devastation. Because there's a concern that there be a complete flee from small and regional banks to larger banks, which would be perceived as more secure and safe, pooling of funds there. But so the concern being obviously bank runs in the smaller and regional banks. But the federal government stepped in and made very publicly known before the open of business today that nope, you don't have to worry about this. If you're a depositor, we've got your back. And so that's what they have signaled. They didn't literally come out and say, don't worry for all of you small and regional banks throughout the country. And they didn't need to. They signaled that everything's going to be okay for depositors. That's what the markets were looking for in a general sense. And so you haven't seen the stock market today take a complete dump. You have seen bank stocks take a hit, and you saw crypto rocket to the upside. So it's been an interesting blend of performance depending on what category you're talking about here. As I record this, XRP's at 37 cents, Bitcoin at $24,205. Now, mind you, just a few days ago, it was in the 19,000s. So now it's at $24,205. Market cap for the asset class almost 1.1 trillion, and Bitcoin dominance climbing. And for most of the last 30 days, it's been flat. Today, it is climbing 42.94%. For those of you that care to look, I know it might look kind of small on your screen depending on the device that you're looking at, but where I'm circling right here, that's the Bitcoin dominance 30-day chart. You can see over the last 24 hours, explosive move to the upside. Most of the money flowing into crypto, it's flowing into Bitcoin. And even though XRP is my largest crypto holding and my favorite crypto, I don't mind seeing that. In fact, I expect that. I've come to expect that based on historic precedent. Once you get into a bull territory, every single time For all of history, and we only have about 14 years of history in crypto, it's always been Bitcoin that led us out of this. Also, USDC stablecoin, it's basically repegged. It's a hair shy of $1, and it was as low as I think 87 cents a couple days ago. And that was the reason that was pegged, is because Circle had a bunch of the funds backing USDC at Silicon Valley Bank, billions of dollars worth, which of course was a bank run and it's collapsed. But upon the Fed stating, hey, we're going to absolutely make sure that depositors are made whole, USDC promptly recovered. And same for DAI, which is backed by USDC. And so we had this headline also from the Crypto Basic, and this is about Ripple. Brad says Ripple remains in strong financial position despite SVB exposure. And in case you missed the news on that, I did put a video out on that just last night. Brad Garlinghouse announced that Ripple did have exposure to Silicon Valley Bank, but it's only one of their banking partners. And so there was a series of tweets. There's 3 tweets, and I covered it yesterday. I'll just read the top one if you want to read the rest. If you haven't seen it, it's on your screen if you want to hit pause here. But the first one reads as follows. Setting the record straight on Silicon Valley Bank questions. Ripple had some exposure to Silicon Valley Bank. It was a banking partner and held some of our cash balance. Fortunately, we expect no disruption to our day-to-day business and already held a majority of our United States dollars with a broader network of bank partners. And so there you go. That's good news too. And that's what you would have expected in a disaster scenario. Yes, in theory, things could have gone bad if they had all of their money in Silicon Valley Bank. And then if the Fed wasn't backing that and they couldn't get their money, well, then you'd have a disaster scenario, and that could have impacts, especially if they lost the SEC v. Ripple case. We don't have to worry about the disaster scenarios now. That is not what's happening. They did the smart thing, which you would have expected a company to do, which is have their money in all sorts of places, which they've clearly done. Now, bank stocks have imploded today, while crypto has moved to the upside, and so it's been an interesting blend. Like I said, I checked the S&P 500, I checked the Dow Jones Industrial Average before recording this video, and they're about flat, maybe technically down a hair, but they're about flat. And then you look at crypto up substantially, and then you look at bank stocks down substantially. And so here's a headline from the Daily Hodl. Bank stocks implode. Bitcoin and Ethereum soar as Fed faces rate hike decision. Crypto markets are flying as banks and traditional finance stocks get hammered by investors grappling with the collapse of several large banking institutions. As a new trading week begins, bank stocks are proving to be the biggest losers, with some of them suffering as much as 75% in losses mere hours into the open. A look at Yahoo Finance's list of top losers shows a long list of banking stocks bleeding out badly. And you can see there's a list on the screen. I'm not going to read them all to you. I will note, I kind of cherry-picked a few of these just to kind of check, okay, where's the market at just a little bit before recording this video, because mind you, again, they put this article out, some hours after the market opened, and it was looking really bad. Not that it's looking good now, but some of these had rebounded a little bit. So I just thought I'd mention that. And then the piece cites the following. Following the recent closure of Silicon Valley Bank, Silvergate Bank, and Signature Bank, fears of a spreading banking contagion have rocked the sector as investors look to see who could be next on the chopping block. At time of writing, First Republic Bank and Western Alliance are taking the worst hits from the market turmoil, both down roughly 60%. And then there's also this. So I always love to bring this point up because it's never going to get old to me. Look at the headline, though, the Daily Hodl. Whales and sharks accumulate $821 million in Bitcoin in just 1 week. Sentiment. A crypto analytics firm that two key investor cohorts have been snapping up Bitcoin as the value of the king crypto plunged below $20,000 last week. So again, tale as old as time. Price go down, whales step in, purchase a bunch of stuff. So the market was not plunging at all, and hopefully nobody was even thinking that it was because of the whales. Of course not. It was out of fear. It was the typical small retail speculators panicking. That's by and large what was doing it. It's humans that decide what the price of Bitcoin is, and they're irrational and emotional. When they get emotional, they make really poor financial decisions for themselves. And whales have taken advantage of that. And so anyway, the piece continues. Sentiment says that Bitcoin whales and sharks, or addresses holding 10 to 10,000 Bitcoin, gobbled up 40,557 Bitcoin, worth a staggering $821.5 million in the past week. With the heavy accumulation from the largest Bitcoin holders, The firm says investors should keep an eye on the traditional markets for clues on what comes next for Bitcoin. They said, quote, Bitcoin sharks and whales don't appear to be to blame for crypto's rough week. In fact, addresses holding 10 to 10,000 Bitcoin have collectively accumulated 821.5 million back during this mid-sized crash. Crypto's correlation with equities is what to watch. So in the short term, in terms of correlation with equities, short term, super short term, detached, but that doesn't mean anything. You know, these are risk on assets that historically have moved together for the biggest moves, especially when there's moves to the downside. There's no reason to believe that's going to cease to exist. But in the short term here, yes, crypto has popped. Equities broadly moving sideways, other than banks moving to the downside, obviously. But, oh, and by the way, this data, I did want to mention this. The sentiment data cited in this article, it was up through this past Friday, March 10th. And so a bunch of scary stuff led up to that point. And that's when whales were taking advantage of this. Now you see the move to the upside, whales benefiting. Isn't it funny how that always works? So that's the reason I wanted to cite this. It's like, I get it for people. It is painful to purchase when there's a sea of red. And when you purchase, you probably aren't at the bottom. So you're going to purchase and immediately see the price continue to move to the downside. I get it. It's scary, but you know, history shows these are typically the best types of times to buy. Oh yeah, here we go. And then, here we go. Oh yeah, I did want to cover it. Okay. And then the sites here. According to the analytics firm, traders have shifted their focus on Bitcoin at the expense of altcoins following last week's pullback. Sentiment says that the change in behavior could be a signal that a crypto market reversal is in sight. And so again, as I cited at towards the beginning part of this video, Bitcoin dominance up substantially over the last 24 hours. 42.9, now it's 42.94%. And I like to see this. Bitcoin historically has always led us out of bear territory. You want to see this, and because you know what happens, right? After money goes into Bitcoin, then it goes into large caps and mid caps, small caps, rinse and repeat. And here's what a chart analyst, Credible Crypto, shared with his 337,800 followers all up on the Twitters. He said, this is, by the way, a Bitcoin dominance chart for those of you that care to look. It's showing where the Bitcoin dominance is currently and where he's anticipating that it will end up going much higher. And he wrote, the writing is on the wall. As I've said many times, I expect Bitcoin to lead the market out of this correction, as it always does, into a major impulse, the likes of which we have only seen twice since 2017. Sending Bitcoin dominance to levels we haven't seen in over 2 years. As alts begin to rally and catch up with Bitcoin, dominance will peak and begin to fall, ultimately making new all-time lows as money flows from Bitcoin and into altcoins post-Bitcoin cycle top. And folks, that's what we are waiting for. And I'm happy to. As an XRP holder, I know I'm going to get mine. I mean, technically no's too strong a word, but you get what I'm saying. You get the cut of my jib. I firmly believe that will be what happens in the future. And so all of the disaster snares that we've seen, including the SEC v. Ripple case, scary. And actually is scary. But still, that's shaking people out of their positions. I don't blame them one bit. That's some serious real-world stuff happening there. And then what have we seen for much of 2022? Like I said, the collapse of Terra, Luna. And then the contagion spreading with Three Arrows Capital, Celsius, Voyager, FTX. All these are real things. And then you have more here, but with the collapse of all these banks, and people did panic sell in the world of crypto as a result of what happened in the legacy finance world. And all of these instances that I'm citing have not and will never stop crypto from becoming a substantially larger asset class. So you can freak out in the short term if that's how you want to roll, but it's I just don't think it's warranted. Not in the end. I mean, the scariest thing out of all those things, frankly, is the SEC v. Ripple case, because there's a real possibility that XRP could be outright banned in the United States in a disaster scenario. But I don't think that's going to happen. I really don't think that's going to happen. But even if that happened, that would still only apply to the United States. XRP would take a massive hit globally in terms of price action, and then it would recover, and people use it for other stuff. And Ripple would continue to use it for on-demand liquidity. So even in a disaster scenario, the worst that you could imagine for XRP in the United States, it's still just going to be a bunch of FUD, fear, uncertainty, and doubt that isn't going to stop any of the adoption. None of these things have anything to do with the long-term trajectory of crypto, not even XRP. So there are plenty of reasons to be excited for the future, and I sure as hell am. I am here for it. All these scary times, don't do a damn thing to my sleep cycle. I'll just say that. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the Moon Family Sedan.